All right. So actually, Rakil and I, this has actually worked out pretty well because Rakil, you did a lot of the technical stuff, and I'm doing more of the stuff that people don't like talking about. So I think over the last month, 2 months, I see that, we've had a lot of new people come in and, people that are still in the Forex family and, obviously Rakil's, people as well that have come in through his intakes. Everyone works really with technical analysis and everyone talks about fundamentals, things of that nature, but we're forgetting a lot of the times what you need to do before you're coming to the charts and really the preparation before you're coming to the charts, what you're thinking about when you're actually going to be in the charts. Everybody's so quick to take trades. I mean, I just look from what I've done over the last couple of months is I've watched sort of our live webinars and our streams, and really at the end of the day, what everyone's trying to do is everyone's trying to execute. And granted, that's exactly what you want to try and do, but I think there's a mystery behind the preparation because a lot of the same questions keep coming up. I mean, even watching the webinar here, people are asking like, what time frame? Why not this? Why not that? And it's you're not getting down to the fundamentals or the core of what trading is. We're retail traders. Retail traders do not have the luxury of statisticians, analysts, all this information being given to them. You have to make decisions based on what you see in front of you. And you have to understand that a lot of the information that's being discussed here regularly applies in every time frame. It applies to every type of trader that you're going to be. It's just how are you approaching the charts? What is your discipline and what are you looking to do and what are your goals? A lot of times when you find that, I go through things with people and, we talk about, we talk about things. It's, people, they don't know how to use a simulator properly and then they don't know how they're doing back testing. People don't understand what sessions they're going to be trading in or where they're trading in and how that session works. How to ask critical questions, like critical thinking questions, how to use those skills to enhance your own, ability to learn. Obviously talking about risk management, and then I'll go through a little bit about, zones versus ranges, things of that nature, sort of what Rakil covered a bit as well. But those are key things. I mean, first, when we talk about using a simulator to backtest, right? Everyone always wants to use a simulator. So everyone will turn around and they'll buy that $100 simulator and they'll say, okay, let's start backtesting. I'm just going to take trades. And well, guess what, Ted? I won 100 trades in a row. I was doing this pair and this and that and this. But the logic behind what you were doing, you won 100 trades. But really, what did you use the simulator for? What were you trying to do? Just run up an imaginary account? Think about using a simulator and think about backtesting as looking through the charts and figuring out where would have been the optimal opportunities for me to win at trading. And that is what you need to do. So if you're taking notes right now, when you're going to go and do backtesting is about testing. It's about testing ideas and testing logical sequences to give you results that you are looking for. It's not saying, Ted, how did you backtest, Ted? How did you become successful? I can tell you exactly what I did. I looked at the chart. I opened up a 4-hour time frame. The first time when I started trading, I looked at a 4-hour time frame and I looked around and I said to myself, why did that big candle move the way that it did? Why did we have such a bullish run? Why did we have such a bearish run? And does that sequence repeat? And then I would go to the previous day, the previous month, the previous year, and I would keep looking for these sequences. And as I started to go through the charts, I started to see that there was the same sequences appearing. Now, for you as a trader, you have to understand that what I see can be different for what you see, right? I'm more comfortable watching things move in different ranges, different areas. I'm more in tune with what's going on because I've seen the same repetition over and over again. But you as a new trader, you have to actually come out and you actually have to be able to do that and say, hey, this is what I'm looking for in the charts. And this is what, when you look through everything and you turn around and you say to yourself, what am I looking to pull out of the charts? If I'm a swing trader, I have to realize when I simulate or I backtest, I'm backtesting on higher time frames, and I speed up that little cursor, that tick data, it goes really fast, and I'm able to trade like 3 days in 3 minutes. But when you come to actually trading live, those 3 days are basically, 72 hours, right? You have to realize that there's going to be time. You also have to realize that time that you're swing trading is going to be exponentially longer than someone who's scalping. So there is going to be an instance where a scalper, what we do in the mornings, we will take 2 or 3 trades. We will lose 1 trade. That can all happen within 20 minutes. As a swing trader, you will realize that you can have 1 trade run for a whole week, and then you lose it. And you turn around and you look at yourself and you said, well, I just lost a week, Ted. Trading sucks. Yeah, trading does suck, but you're a swing trader, because there's going to be those weeks where you're going to have a trade run for 4 or 5 days, and you're going to collect, your 5 or 10%. So you have to understand the variables of trading, and you have to understand when you're backtesting, what exactly are you trying to backtest? What are you looking for? What are key identifiers in the charts that are going to benefit you? So like I said, if I'm looking right now and I'm trading the London-New York overlap, or I'm trading the London session, or I'm trading the Asian session, I have to go at specific time frame. So if I'm trading the New York session, I'm going between, say, 6 a.m. and 11 a.m. or 6 a.m. and 12 a.m. So or 12 p.m. Those 6 hours, I have to go through countless days of data, and I have to understand how those days of data correlate. And what I mean by that is when you start trading and we start working through the sessions, there's going to be times in a New York session or a London session, or even not so much the Asian session, but there's going to be situations where you're going to get stopped out and you're going to say, well, why did that happen? I was trading the hour time frame and I looked at the 4 hour, and the 4 hour, had more room to move down to support, and now the hourly candle got stopped out, right? And you look back. You have to understand that there's going to be instances that we've hit a low on a higher time frame. And this sort of like when you're trading is a lot like driving. When you're driving in a straight line, it's easy, right? So when we're back testing and we see that the trend is down, you just keep selling and you're driving along just like you would be driving in a straight line on the highway. You just drive straight. It's easy. When there's a trend, it's easy. It just basically keeps going in one direction. So you can't lose, right? So you turn around and say, hey, this is great. But there comes a point on the highway that there's going to be an off-ramp. Same thing with trading. There's going to come a point where that trend stops. The off-ramp, you get off the highway, the trade will stop also. You have to be able to identify that, but more importantly, you have to be able to see that coming, right? Have you ever driven and you've watched guys on the highway, you're in a 4-lane highway or whatever, 5-lane highway, and there's an exit coming up in about, 100 feet, 300 feet, less than a mile or a kilometer, and there's that guy in the left lane that swings across 6 lanes. That's you when you're trading, when you don't realize that we're coming to a major support or a major resistance. Because now you're like, whoa, what happened? I didn't realize this was coming. It's the same thing with that idiot who's in the left lane who's just sitting there falling asleep. Oh, there's my exit. I have to go all the way across and cut everybody off and almost cause an accident to get off the highway. This is the same thing when you're trading. Your lack of preparation and your lack of understanding of how each time frame works with each other is the thing that's killing you in the market. It's the reason why you can't identify ranging versus, trending markets. It's because when you look at a chart, you're just seeing, hey, we're just going down or we're just going up, and it's going to happen forever. It's not. So when you're back testing and you're simulating, you have to understand that when you take a loss or you hit a consolidating market or a ranging market, that is a key thing that you have to start being able to identify before it's about to happen. So then the question becomes, Ted, how do I identify that? What am I doing in my trading to figure that out? Okay, so let's break it down. If we've seen bearish movement for 3 or 4 days straight, you can easily go onto a daily chart and you can start to see where we should hit, like what area we should hit. I mean, if we look at like a pound yen pair, or we look at gold, there's going to be a point where we're going to come to a halt. You have to use that, famous term of looking left to see where there could be possible levels of consolidation. And, when you turn around and you see that, you have to then make a determination. And sometimes your determination isn't going to be right. I've done it. Rakil's done it. Everybody's done it. We've looked and we said, hey, this daily seems to be a very strong support. Chances are we're not going to break that support. We look at the weekly, we look at the monthly, and you can see that we're hitting that support. And these are things that all you're doing when you're checking your daily, your weekly time frames, those are like checking your mirrors. Like when you're driving your car, it's as you're checking your mirrors. You don't have to stare at your rear view mirror for fucking 6 hours when you're driving on the highway. But every so often you want to check your rear view mirror. Hey, maybe there's someone tailgating me, or up my ass. Maybe there's an ambulance behind me or a police cruiser. It's just reflection. So when you're trading on the smaller time frames, sometimes it's good just to click over to the weekly or the monthly or the daily and say, hey, we're approaching like a major area. We're approaching a monthly or a weekly resistance or a weekly support. There could be shit happening that I don't know. And you can see your hourly time frame may start to match up, that price level may start to match up with the weekly support. And you didn't notice that because you were just driving straight. You just saw on your 4-hour, your hourly, and your 30-minute chart that we were in a bearish momentum and that's going to happen and we're just going to keep going bearish without realizing if you had checked your rearview mirror, we're approaching a higher time frame support or a higher time frame resistance. That is your key. When you start doing that and you're able to start sort of toggling through time frames, and like I said, you're not doing this to confuse yourself. You're not going to turn around and say, oh, well, there's resistance everywhere, there's support everywhere, I don't know how to determine this. But use logical sequences, right? If we're in the middle of the New York session and we're coming towards the London close, and you can see that we've tapped a major support or a major resistance on the daily or the weekly or the monthly time frame, chances are as volume leaves the market, we're not going to break that support or we're not going to break that resistance, because more than likely if we were to break those levels, we would already have done them. There's been a lot of times when we sit in a group and we do the live webinars and we sit there and we look at around 9:30 a.m. Eastern. The market hasn't done anything. It's just consolidated. It's just ranged. In the next hour or so, it's very unlikely that all of a sudden we're going to get like a 90 pip move. The move is going to happen throughout the London session. It's going to pull back a bit before the New York session, and it's going to continue right through the rest of the session. You're going to see that. We've seen that countless times where we've seen a news event. It's just plowed through levels and it just hasn't stopped. Or we've seen a rally that started in the London session and it's just pushed right through the New York session. So you have to understand that and you have to be able to gauge that. And the thing is, at the same time, with risk management, whether the market is trending or ranging or consolidating as we call it, you will not be affected. So when people turn around and say, well, how do I determine what's ranging and what's not ranging? You can't really determine that. There's no special formula. There's no like, well, if you see these candles, you're going to notice this. Ranging starts after usually 2 or 3 candles. And really, when you want to identify the candles, I mean, they're all in the same size. Usually, you'll see that they start to print up and down. You'll start to see that it's consolidating before it breaks out. You can start to recognize this. And when you go back test, Basically, the simplest way, if you want to understand ranging versus consolidating or ranging market versus a trending market, all you have to do is basically follow this simple rule, and we've all done it before, is I want to trade with these types of candles. I don't want to trade when candles look like that. That's all what you want to do. So if you turn around and you open up if you open up a chart, if we turn around and we open up a chart here, give me a second. And so if we turn around and we open up a chart, we can clearly see here, we can jump to any time frame and where do we want to be trading. So this is the pound JPY. You can see, does it make sense to be trading this, or does it make sense to be trading this? Right? So when we look at things and we turn around and we go through scenarios, we have to do this. So when you're back testing, I'm saying, okay, this looks good. This doesn't look good. This looked good. This doesn't look good. Maybe this doesn't look good that well. This looks good over here. And then what I'm doing essentially is when I'm back testing, I'm going to take a look and I'm going to see, where are my times? Where are the times that this is happening? And, what are the similarities between those times? You're going to start to realize that, hey, there's things that are popping up that are starting to make sense, right? So you can see here as a quick example, what we did was right here, very, very quickly, you can see that your time right here, 4 to 8, 4 to 8, 4 to 8, right? So you had 4 to 8 all the way through, and you can see where right away we had 1, 2, 3 areas where we had trending markets, and then you can see here we had consolidation here, we had consolidation here, but now you can start to look and you can start to back test and you can start to say, why is this happening at this time? Why are we getting these moves right here? What is the significance of that time frame? And when you start putting that together on a chart, you're going to start saying to yourself, okay, why this is happening, because this is the London session. This is the New York overlap. This is this. This is that. This is this. This is the day that it's happening. These kind of things. So when you start going through that and you start saying to yourself, okay, what can I do now to be better at trading? Those are scenarios that you're looking at when you see that and you say to yourself, okay, now I start to realize that every day at this time, this is what's happening. We're seeing this scenario happen every single time at this time. And that is what you need to do as a trader. You need to start putting that together so you start to recognize that, hey, at this point, if we see that same scenario happening over and over again through my back testing, that pattern or that idea should repeat the majority of times. Now, once again, when you back test, you are looking for higher confluence. You're not looking to say that every day at 7 a.m. we're going to have a bull market. That's not what you're looking for. What you're looking for is you're looking to decipher where the best opportunities for you to trade are and how will you approach that trading scenario. So if I know that the markets are going to trend between 4 GMT and 8 GMT, I don't know which way they're going to go. But what I can do is I can say, well, based on historical data and based on what I've researched, that if I see a trending market at this time, chances are the market's going to continue to trend. And that is how you backtest, but that is more likely how you become confident in the markets. Then when you turn around and you look at the session that you're trading in, you turn around and you say to yourself, okay, I'm not available to trade between 4 GMT and 8 GMT, Ted, because I'm sleeping, I'm at work, I'm doing whatever. So now what you have to do is you have to figure out the time that works for you. If you're going to trade the Asian session, you need to learn a little bit about how the Asian session works. The Asian session normally is the session that starts the next candle. right? The next daily candle, right? If we break down the daily candle into 3 sessions, the Asian candle starts the daily. The London candle portion of the candle continues that move. And then normally the New York candle ends that move. The New York session ends the candle move and it starts to pull back a bit, right? So that's when you start backtesting, that is what you have to do. Break down the daily candle first, break down the weekly candle into daily candles, and start to see where you're getting the majority of your movement. And now you can anticipate. There's a reason why we all turn around and say, don't trade on Sunday. Don't trade when the market just opens. Because there's nothing there to guide you. There's nothing there to help you. That's like you going out into the wilderness without a compass or without a map. Sure, you can keep walking north. You can keep following a river. You can keep doing all that. But why would you put yourself in that position when you can wait till someone else has figured out the path and then you just follow it? Like, why would you put yourself in that position to not have the most optimal time to win? There's a reason why the majority of the wins come between Tuesday, Wednesday, and Thursday, because the market has already set up, the market's in fluid motion, and we're able to capture the trend. We're able to capture what's happening that week. The other thing is when you start to backtest and you start to look at where those big candles come from, review all aspects of those types of candles. Was it a news-related candle? Was there a breakout? Was there an event that happened? When you start piecing that together, you'll start to realize why the market has been ranging for the last 3 days, right? And we've said this enough in the live webinars to realize that a lot of times the market is not going to play its hand until news events are released, because they are exactly like you. Why do I want to put my money into the market when I don't know about the economic or political event that is going to happen, when I'm not sure of what's going to be said? Why am I going to give away my money? That is the same approach that a retail trader should have. Why should I give away my money when the institutions haven't gone through yet, right? It's sort of like a high school dance or even a grade school dance. You have the boys on one side and the girls on the other side, right? So what do? You all stand there like idiots for 2 hours, the boys on one side and the girls on the other side, and you just stare at each other, right? You go back to your grade school dances, that's exactly what happened. It's the same thing in the market. Until there's an event that changes that, you're going to have 2 sides that aren't going to do anything. That is your ranging and your consolidating market, right? And then what you have is you have that one person that goes out there and says, hey, porn star, come dance with me, right? And then they start dancing. And then all of a sudden everyone's like, hey, this is great. Look, they're dancing. I can do this too. That is your market. That is exactly what happens in the market. Donald Trump says something, just before he's about to say something, the market starts to move, things start to happen, and then all of a sudden everybody's in the market because Donald Trump has said, hey, make America great again, or, we're going to die, or whatever we're going to do. And then all of a sudden all the institutions come into play. They all show up. They all do what they want to do. That is how you have to anticipate the market. So your preparation is 80% of your success. Coming to the mixer stream every morning for 3 hours is 20% of that success. 80% is your own prep work. It's now going through the simulator. If you don't have a simulator, go through the charts and look at all your big candles, figure out which candles make the most sense. How would you have traded those previously? Go through those scenarios. The game that I like to play and that I used to play a lot was guess the direction of the market, right? If I can't trade, if I'm going to work my 9-to-5 job, I'll open up my chart at 7 or 8 a.m. before I'm going off to work. I'll mark down prices that I see on my charts that I want to look at, or the pairs that I'm watching, and then I will write down where I believe the next price is going to be. Where do I believe we're going to go? So UJ is at 110. I believe it's going to be a bullish market today, so I believe we're going to go to 110.500. And I'll mark that down, put that in my pocket. I'll look at the charts at lunch. I'll look at the charts on my break. If the charts have gone that direction, I was right. So now I understand that, hey, my thought process is more accurate. There's things are happening. If I was wrong, I can now go back and say, well, what actually happened in the market? do that constantly. It doesn't cost you anything. And at the same time too, if you're honest with yourself, you're just going to get better. It's like going to the basketball court and saying, okay, I'm going to make 10 free throws in a row. If you make 10 free throws in a row, hey, you've done something right. But if you're going to cheat yourself and you're going to say, hey, I'm going to just try and make 10 free throws, but I really didn't actually do that. I turned around and I said, well, I made 8 out of 10 or whatever it is. Then you're just cheating yourself, right? So that's what it comes down to. So if you're going to do these kind of activities, or you're going to do these kind of things to help better get your eyes with the charts, or really, give yourself experience, you have to be honest with yourself. And at the same time, like Rakil said, nobody cares on Instagram how many times you were right or how many times you're wrong. Nobody's going to pay your bills. So the more honest you are with yourself, the better results you're going to have. So when you work on those aspects, that is going to help you. The next thing, asking questions. When people ask questions, you have to ask questions that will help you in your trading. The biggest thing that I'm disappointed with when I hear people ask questions is, well, what do you think of UJ, Ted? What do you think of GJ, Ted? What do you think's happening? I don't know. I don't know what's happening. When you are going to want to figure this out, and when you're going to turn around and you're going to say to yourself, okay, I want to understand what is exactly happening in, I guess, this market, right? And you turn around and you say to yourself, okay, what's happening? Asking somebody else is not going to make you a better trader. And I can tell you that from experience. Just constantly asking somebody what's happening or how this is going to happen and what you're doing, that's not going to help you succeed. That's not going to give you information, and it's not going to give you an idea of what's happening. So what I've done, and I have this, and it's in the group chat or in the mentorship materials, is how to ask questions, right? So when we turn around, Rakil, you want to mute everybody? You guys are there's people bouncing around that aren't muted. Okay, I think we're good. Sorry. So rules for analysis. So this is something that I built, and I gave out this a couple of years ago. It's similar to people when they play poker. Poker players, they'll turn around and they'll say, I had pocket aces and I lost. Okay, great. How'd you lose? Well, there was 3 guys in the hand and then I got rivered. Okay, so what does that mean? So now you can start to see how it gets complicated. It's the same thing when you go to a service center with your car and you go to the service guy and be like, yeah, my car makes a sound. And then they ask you, what kind of sound does it make? Bump, 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 bump. Yeah, but your bump, 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 bump might mean to somebody else, right? So when you start looking at that and you start saying to yourself, how can I get better by asking questions? These are the types of questions with trading is the same thing. So like when we look at, from a poker standpoint, we want to ask, how many chips did you have? How many chips did your opponent have? What was the trend at the table? Do you have history with your opponent? Did you see any patterns with this player? Did you have position with this player? It's the same thing with trading. You asking me, what do you think about GJ means absolutely nothing to me. I don't give a shit what happens with GJ. I'm not even in that trade. You're asking me because you want to know the answer, but I don't know anything about what you're trying to do. So when you're asking a question, you have to pretend the person in front of you knows absolutely nothing. And it's true. We don't know anything. You post up a chart and you show me an arrow. I don't give a flying fuck about the arrow. That doesn't do anything for me. But what's your plan? What are your goals with the trade? Where have you marked out support and resistance? Are there any information about the candles that are going to help you? Is there news scheduled? What does the higher time frame look like? How have you been looking at this trade? Have you watched this for the last hour develop, or, have you come to the market expecting this to happen so that we have a background of what you're doing? And then Where are we in the session? Are we at the end of the session? Are we at the beginning of the session? Are we in the middle of the day? There's a lot of information that you need to put together before you ask, well, should I buy this or should I sell this? It's so important to have a holistic view, because this is the critical part of how you're going to grow as a trader and how you're going to develop as a trader. Because what you're finding now is you're being able to say to yourself, hey, I'm going to, Ted or Rakil or whoever you're speaking to, and I'm able to have a conversation that gives the full story of what I'm trying to do, so that I can now give it to the next person. It's that age-old saying that, if you want to teach somebody how to do something, you have to teach them as if they were 5 years old. What are the step-by-step processes? And this is the same thing when you're doing analysis with trading, or even when you're talking about trading. Get used to telling the story. Yeah, it sucks. It sucks talking for 20 minutes about one single trade. But that is what you do. When I talk to my friends about poker, you should hear them. They can go on for an hour about a single hand. You figure if you're playing a tournament over 4 days, you've played hundreds of hands. And these people are spending 1 hour on one single hand in a 3-day tournament. Imagine how mind-boggling that is, that's the level of detail they want to get to. This is the same thing with trading. If you are planning to be an expert, if you're planning to have a positive expectation and a positive reward in trading, you have to be so detailed that it makes other people sick. Think about it this way. If you went to the bar tonight and you were talking to a woman or a man and you sat there and told them these things about your trades, if they get super bored, that means that you're on the right track. Because they don't want to hear about the session. They don't want to hear about the time. They want to know how much you made. How much did you lose? That's what the average person asks you when you trade, right? Nobody turns around and says, so were you trading the London session today? Were you in there right at the London Open? What happened? Were you able to trade GJ? Did you see the range that it had? No, they say, so how much did you make today? How much did you lose today? Right? That's the average person. So if you're going to be the average person and you're going to approach trading like the average person, you're going to have, average results. And this is the thing. When people go through this and they go through this, when you talk to other traders enjoy that, because what are the questions I always ask everybody? What does it look on the higher time frame? What did you do here? What's your plan? What's this? What's that? Because now I can frame my answer for you and I can give you a more direct answer, because I know if you're only going for like 8 pips or 7 pips or 5 pips, I can say the range is 20. You basically have a 1 in 4 shot of getting that 5 pips, because you have basically in that range, we have a probability of getting 5 out of 20, right? If you look at a test score, it's hard to get 20 out of 20. But it's easy to get 1 or 2 marks, right? Like when you're back in high school, back in university, if you put your name on the paper, you get a mark, right? And usually that's what happens. They give you 1 or 2 marks. So when you think of trading, you think of it the same way. You turn around to yourself and you say, hey, if I can get just a portion of this move, I'm in a very, very good position. And, when you look at things like that, you turn around and you say to yourself, hey, this is exactly what you want to do and how you want to be able to process this information. So the better that you are at asking questions and the better you are at giving information, the faster you're going to succeed. It's the reason why when you look at people who trade well, you gravitate towards them, right? And then the people that can educate or mentor well, they become better traders, because I'm answering the same damn question 1,000 times, right? It's the same thing when you're in a math class. The smartest math kids are probably the ones that can answer questions, but more importantly, they also get questions asked to them all the time, but they also know how to ask the right questions. So think of trading and math as a very similar subject, where you can look in the back of the book at a math question and be like, hey, that was easy. I figured that out. I know. Okay, you just have to subtract that, add that, multiply that. It's the same thing with trading. Oh, man, yeah, that was an easy trade. The daily was bearish. Like, of course it's going to go down. Like, who wouldn't have known that? Yeah, but you don't know that when you're actually in the market. You see that after the fact, 4 hours later. Oh, yeah, that 4-hour time frame, yeah, that was going to crush every support. We knew all that. You don't know that at the time that you're trading. It's the same thing. But more and more practice, more and more assumptions, more and more probability, you're able then to put yourself in that position and say, yeah, I know this is going to happen here. And then, you get the comment of, oh, you're a chart wizard. How'd you know that? How'd you know that? Well, when you do it 10,000 times, eventually I'm going to be right one of the times, right? So you just have to try and make sure you're right more times than not, and you'll be profitable as a trader. That's what it comes down to. And then what you do is you get even closer with detail and you fine tune yourself. You turn around and say, hey, this is a lot easier for me to manage, and I'm going to just take trades at this particular time based on this particular idea, right? So let me kill that. Oops. All right, so first, let's do this. So this is something that I tell people a lot when you're going through certain things and you're looking at ideas and whatnot. This is, something that people don't realize is very important is, just because you hear somebody making money doesn't mean that you're going to be making that kind of money. Everybody has different risk tolerances. Everybody has different life experiences. And we've said this a lot, no two traders are the same. So you have to get out of the mindset of, well, trader A did this. Why can't I be like trader A? You don't know trader A's background. You don't know what they think or how they think. You only know the way that you think. And some people can't grasp concepts. It takes them longer. That's not a bad thing. I have people come up to me all the time, and this is the one thing they turn around and they say to me. They say, well, Ted, I do this big job. I'm very important. I'm very smart. I got straight A's in school. I was valedictorian in my high school class. University, I did it in 3 years instead of 4. I don't understand. I should be able to just trade, and it should be very easy for me to trade. I don't understand what I'm not getting. And then you have somebody that walks off the street who sold drugs for 5 years, who's been in jail, who did whatever, and it's like, yeah, trading's easy. I just click here, do this, do that, do this, do that. That is the worst thing that you can do as a person, is look and say to yourself, because I'm good at X, Y, and Z, I should also be good at trading. That is the biggest mistake you can make as a trader. And you look at the next person and be like, that guy can't even string a sentence together, and he's making $1,000 a week. Meanwhile, I can write a PhD thesis paper, and I can't make $100. There is your mistake. You are now making assumptions on people and things that you know nothing about. Trading is very different from anything that you're going to do. There's a lot of similarities in terms of, anything that requires routine, anything that requires progress. You're going to see a lot of similarities, but some people just have a natural ability to understand concepts faster in this space. And that doesn't mean that you won't understand them faster or you won't understand them, but it just means that you're going to have to take a different approach. Maybe you're working 9 to 9, or, you have weird work hours. Maybe you work shift work. You're not going to be at the same level as a kid who sits at home in their mom's basement where their parents give them money. They don't have to work. They don't have a job. All they can do is sit and talk trading, and they play video games all day. So they have a natural ability to formulate thoughts faster, and they can gamble more, and they don't care about their life. You have to understand that. And the more that you're able to detach yourself away from others and say, okay, what are my strengths and what are my weaknesses as a trader, and what do I have to improve on, the better off you're going to be. When I started trading, I didn't look, and this is the honest truth, I didn't look at anybody else trading because I didn't understand what anybody else was doing. I was more focused on myself, and I said to myself, well, hey, if I can supplement my income and I can make a couple extra dollars, I'm good. I looked at it as, hey, when I go play poker, I can watch people make $5,000, $10,000 in a night. I was happy with my $300, my $200. I would get off the table at 11 o'clock at night. I would play from 7 p.m. to 11 o'clock at night. I'd make $250. I'd be like, great. Tomorrow I can buy myself lunch at work. I'll have gas for my car now. It cost me nothing to play this game. I profited. And for 4 hours, I basically made $80 an hour, and it was tax free. And I had a good time. I talked to people. I was able to socialize. It's the same thing with trading. You have to approach it the same way. You have to say to yourself, if I only have $100, I'm not going to make $1,000 a week. I'm going to make maybe $3 or $4 a day. And maybe I'll make $20 a week. And then I'll take out $10 and I'll buy myself a Subway sandwich. Why? Because the market paid me to buy a Subway sandwich. So now I'm happy, right? I won, and I remembered when I played poker and I won my first poker tournament, I went and I bought a Rolex watch. I still have that Rolex watch today. It sits in it sits in my drawer, but I don't wear it often. But it's like, it's a constant reminder that I was able to succeed. That one specific day I made $12,000 US. I was able to succeed, and I have something to show for it. And I rewarded myself, and it made me feel proud, because even to this day, I still tell that story. Back in 2008, I was at the Venetian. I was playing poker. It was a $535 buy-in. I was short stacked through most of the day. We got to the final table. I knocked out 3 people. I asked the chip leader for a chop. He refused. I knocked him out as well. And then finally I won the whole thing. Like, I can still tell that story as if it was yesterday. I can still tell you at lunch break, I ordered pasta because I was down to like 5,000 chips. And I'm like, man, I just want to have a good meal at least, because I was going to be out of that tournament shortly. And then from that point on, I just doubled up. And then I sort of laugh every time I go to the Venetian. I have a plate of pasta, right? It's like little things like that you're going to remember, that's going to motivate you to continue playing. It's going to motivate you to continue trading. It had nothing to do with anybody else. My friends have won hundreds of thousands of dollars, millions of dollars playing poker. It never bothered me. I was happy with what I did. And when you look at stuff like that and you turn around and you say to yourself, what motivates you? That's what motivated me. I was happy with that. I was happy that I succeeded where others didn't. Someone gave me a pat on the back. My buddy turned around, gave me a pat on the back. I went to Bahamas with one of my buddies. He won $75,000 in a tournament. I was happy for him. I can't do that. I made $3,000 playing in the cash game. That was happy for me, because you know what? The rest of the trip, I did whatever I wanted to do. I had $3,000 in the Bahamas. I bought ice cream when I wanted. I had pizza when I wanted. I did excursions. I did whatever I wanted because I had free money. It rewarded me, and I felt good about myself. Yeah, my buddy had $75,000. He ended up playing all the other tournaments and doing all this other stuff, but he's a professional poker player. I'm not a professional. I enjoyed myself. This is how you have to approach trading. What does it mean for you? Where do you get your enjoyment from, and where are you going to progress as a trader? Who cares what Ted's doing? Who cares what Rakil's doing? Think about what you're doing, and think about how it rewards you and how it makes you feel. If you're not happy trading and you're not happy doing what we're doing right now, then you shouldn't be trading. You need to be happy for yourself and happy for the things that you do in there, and really put yourself in a situation to be like, hey, I'm succeeding on my own terms. And when you look, these are the questions that you want to be asking yourself, is you want to say, hey, am I putting in the time to be a successful trader? People turn around and everyone tells me, well, Ted, I'm putting in 20 hours a day. I'm reading everything that you do. I watched all your webinars. I attend the mixer sessions. Great. But, what am I doing? Am I actually putting in the knowledge? Am I actually learning effectively? Am I turning around and watching a webinar and just sitting there watching it like it's a movie, like I watched Avengers Endgame? I can't even tell you half the shit that happened in Avengers Endgame. It was just a blur, blah, 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 this happened, that happened, all this other stuff. I couldn't tell you all the stuff that happened. I mean, there's bits and pieces of it, there's funny parts, Thor's fat, great, okay, haha, funny. But, that's just, you shouldn't be approaching that when you're looking at webinars. When you're studying, you should actually be actively studying, making notes, questioning what is being said. You go back and you listen to this webinar, you'll be like, well, Ted just talked a whole lot of shit for an hour. It's a waste of my fucking time, right? But there's going to be pieces of that webinar that you're going to listen to, and you're going to be like, oh, Yeah, that made sense. That's me. I need to fix that. Ted identified that in me, and he doesn't even know me, but I need to fix that part of me. That was something that I just needed somebody else to speak about, to jog my brain, to kick my ass, to say, hey, this is what I have to do to improve myself, right? The other thing comes down to is, are you participating, right? Are you participating? That doesn't mean, raising your hand for every question in class, but it means that, if you're struggling, are you reaching out to people and asking them for help? People come to me all the time and they say, well, Ted, for the last 6 months I've been trading on my own, and I haven't been doing too well. I don't know why. And I say to them, I said, well, after month 1, when you realized shit wasn't going well, why didn't you come to me? Oh, well, Ted, I think I figured out myself, I'm a self-starter. I learned better on my own. Yeah, well, maybe in this case, you're not fucking learning better on your own. After a fucking month, you know what? If my house is still on fire after a fucking month, I'm going to call the fire department. I'm not going to try and put the fire out myself, even though I think I'm a firefighter. Like, you have to at one point cut the umbilical cord and say, hey, listen, I actually need help. Asking for help is not a negative thing. I never get upset with somebody who comes to me and says, Ted, I need help. I never turn around and be like, oh, you're a fucking idiot. No, it's the opposite. You're not a fucking idiot. You actually recognize that you need help. You know what? Go to the gym and go lift 400 pounds today. And when the barbell gets stuck on your chest, what are you going to do? Try and push it up? You think if you hold it there long enough that you're going to suddenly be able to gain strength to push 400 pounds? No, you're going to have to start crying like a little kid asking for 2 guys to lift the barbell off you. It's the same thing with trading. Do not feel that you need to have an ego here. You know what? If we traded, I would almost want to say everyone get into a single room and trade naked and then see how everybody feels. Because I guarantee you nobody would care about the dick size, the tit size, or the ass size of anybody. They'd be caring more about fucking getting trading done, right? That's the same approach that you have to take with asking people for help and actually educating yourself and progressing. You have to be able to walk up to somebody with your dick hanging out and say, hey, I need some help. My dick's small. I need help. Nobody's going to laugh at you because your dick's small. They're going to say, hey, thanks for reaching out. I'll help you. That is what you have to do. You have to keep that mentality of, if I can't figure this out on my own, I need to reach out to somebody. Okay? And that carries on to am I waiting for something to happen or am I making it happen? Those who are progressing are constantly active. They're constantly chatting. They're always trying to do something to improve themselves. And like I said, it doesn't mean you have to go overboard. You don't have to spend 6 hours messaging somebody. But you know what? If you find that you're getting stuck on something, just ask for that. You might just get like a little quick 5-minute answer, and that gets you over the hump, and you move to the next part. It's not that you need to ask for every little thing. Ted, what do you have for breakfast? Ted, when did you take a shit? Ted, when do you need to do this? No, you know what? There's going to be a little thing where it's like, hey, Ted, I lost this trade the other day. I'm really confused. Can you show me, is there something here that you would have done differently? It doesn't mean you have to show me every single trade, but if you notice a pattern in your trading, maybe you have to stop for a second and reevaluate and get a little bit of help, right? The next thing is, is your trading plan complete, and are you following your trading plan? These are the biggest things that people don't realize is, they start turning around, oh, I want to trade US 30, Ted. I want to trade USD ZAR, Ted. I want to trade GJ, Ted. And it's like, what have you done for the last 6 months? Well, I've traded USD CHF. I've traded USD CAD. I've done, gold. I've done this. I've done that. And it's like, so what's your trading plan? Well, I don't really have one. I just like to pick pairs, and that they move really fast, and that is not trading. If you want to be successful, you figure out which pairs you want to trade, which session you want to trade in, what is your risk, what is your reward, and what is your overall plan, and you stick to that plan. Look at it this way. If everybody's house is burning around you and your house isn't burning, do you care about what everyone else's house is doing? No, because your house isn't on fire. When your house is on fire, the first thing that you need to do is put out your house's fire. You don't go and help your neighbors. Yeah, that's a great thing to do. You want to be compassionate. You want to be an idealist. You want to help other people. Help yourself first. You see everybody trading GJ and you don't know how to fucking trade? Don't be trading GJ. Focus on things that move slower, that move easier, that you understand. Who cares what everybody else is doing? Focus on what it matters to you and how you want to approach things. And when you look at this, the next thing is, have you mapped out your next 1 month, 6 month, and 1 year plan? And that's not necessarily just trading, but that's in general. And I have conversations with people all the time. The first thing people turn around and they say to me is they say, hey, Ted, I want to trade because I want to make money. And I say, well, why do you want to make money? I want to help my family. I want to help my friends. I want to give away to charity. I want to do all this stuff with money. And then I say to them, I said, so why aren't you doing that right now? Well, I don't have money. Okay, why not? Well, my job sucks. Well, why didn't you get a better job? Well, I don't know how to do that. You're looking at trading as an escape. And you're saying, you know what? In a month, I'm going to make money. I'm going to be able to do this, and this. And when it doesn't happen, then what ends up happening is you start doubting yourself. You start doubting your ability. If you map out a plan and you incorporate trading into that plan over the next year, and you gradually turn it from a hobby to something more serious to then something full-time, you're going to enjoy trading a lot more than would you be if you thought that trading is going to be full-time and that's going to be your only form of income. That's the biggest mistake you can make as a trader, is trying to determine that Forex will be your only way to make income. And when you look at stuff like that, and when you turn around and you say, hey, why am I not successful? It's because you're putting pressure on yourself that you need to put pressure on. And like I've told people, Forex, do not have it replace your income, have it supplement your income. When you are comfortable trading and you've built out a reserve and you've built out savings, you've paid your debts, then start looking to trade full time. Don't try and do it when you have debts, when you have obligations, when you don't have the time to trade effectively. Don't try and say, well, now I'm going to go full time, Ted. I quit my job tomorrow and I'm going to trade full time because last month I made like 40% in the markets. No, try doing that over the next year. And if you're still able to make 40% every month and you're paid off your debts and you have money saved up, then look at trading full time. When I started trading, I didn't leave my job until I had everything paid off. There was no benefit to me because I was deathly afraid that one day I would just lose all my money in the market. Even to this day, I'm still deathly afraid that some stupid shit's going to happen. So I'm very, very cautious. I always try and do that, right? I was making money in my job and I was looking around at everybody going, I just made like 3 times my salary today. Basically my monthly salary, I made that in a day. And I would still work full time. It just work full time became easier. It didn't become the sentence, like the life sentence that you thought it would become. Now I enjoyed working and I had better relationships with my coworkers. I had more fun at my job. I was able to say no to people. I was able to, create new things for myself. I chose what I wanted to work on. And people said, how'd you get away doing that? I didn't tell them that I was making all this extra money. I just said, hey, this is what I want to do. I took more control over what I had in front of me. But I didn't turn around and start telling off my boss and being a dick because I was making extra money. It's just the freedom and the satisfaction of having that supplementary income where it's like, hey, when my paycheck hit my bank account, I wasn't counting on it. I wasn't turning around going, oh man, I need that, $2,000 this week. Otherwise, I'm not going to be able to pay rent or whatever I was going to do. But now it's like, hey, I just made $3,000 this morning. This is a good day. Like now I can map out my day accordingly. And I was still processing that plan of like, hey, this week, if my goal is to make, another couple thousand, I've reached my goal. And then over the next month, I'll make another, 2 or 1,000. And I was gradually, continuously building on that goal. And that's what you need to do as well. So, and then the final thing is, am I being realistic with my approach? If you only have, 1 or 2 days a week to work on Forex, you're not going to be as good as somebody who's working on it 7 days a week. So you have to expand your plan and you have to say to yourself, hey, maybe I'm going to be able to do things at a better pace when I have a little bit more time. But if I don't have that time, I have to accept the fact that maybe trading is going to take me 3 or 4 years to become profitable at, where other people, it took them maybe 1 or 2. So you have to be realistic with your approach and you have to be able to put yourself in a position to say, hey, this is what makes the most sense to me. And this is how it's going to work for me. I don't care what everybody else is doing, but I care about how I'm able to approach this. If I work all night, I'm not going to be able to trade the New York session. I'm going to have to trade the Asian session before I go to work. If I work during the day, I'm going to have to trade the Asian session at night, or I'm going to have to trade before the New York session, or I have to put pending orders in. I'm going to have to do other things. I have to figure out that balance between what I'm doing and what's happening. That's the most important thing, that when you look at what you're doing, that's what you want to be able to do, is plan yourself accordingly and make sense of what things work for you. All right, so let's go through some quick charts. I know Raquel did a lot of this, but I'll give you guys a little bit of a run through. I want to talk about just some things that will help you in terms of, identifying ranges, identifying zones, things of that nature. What the simple things people are doing that are costing them, issues, or causing them issues, and things that you can do to help improve what you're trying to do and where you're trying, how you're trying to process information. Okay, so let me do this. Just do that, do that, do that. Take it like that. All right, so let's do this. Okay, so, here's a GJ chart. So we talked about this before. And we go through, what we're trying to do. And the first thing everyone always says is, which direction is GJ going, right? So when you look at your charts and, you look at this hour, it's pretty straightforward, and we can see that essentially this is the trend, right? We can all agree, because the simplest way to look at things is you look from the left side to the right side, and you can see, right? So this is GJ. Right? We're looking from the left to the right, and you can see essentially what's happening here very easily is, as we look over here, the market is going down over here. So we know the market is in a bearish trend. Right? So we know this. We know exactly what's happening here, right? So it's pretty easy. But then what you say to yourself is, well, Ted, how do I identify the range? Well, now this is where we start to get a little bit nitty-gritty, and this is what we'll do, is we don't have to worry so much about what's happening over here, because that's already passed, right? We can all agree that already passed. That was in the 7th, the 8th. But now if I'm trading my hourly time frame, I need to worry about what's happened immediately over here. And now you can see what's happening, right? So if we turn around and we map this out, how would we want to map this out? So if I turned around and I looked very, very closely at this, it's very straightforward. So I would turn around and say that for me on the hourly time frame, this would be a resistance. And then I would look to say this is probably a support. Because once again, when we go through, this was a support previously that got broken. And now we move to the next level. So this was your original range. We dropped down and we hit this support. And now you can see we bounce back up. We hit this support, and then we basically were on our way back up again. So with that being said, how do we trade this? Well, you can't really trade it, because it's what? It's sideways, right? We're in a sideways movement, because at the same time, when you look, we should be going back down again. Right? And this is where people start to make the mistake, because I can tell you what they're thinking right now is, you're like, well, Ted, if, this upper area here is your resistance and this is your support, well, obviously, we're in a downwards trend, so it should be going right over here, right? Okay. In theory, you are correct. But now what do we have to do? Remember we talked earlier, just checking our blind spots? Look at our daily candle. So now what? Oh, well, Ted, this area over here is now becoming a new support area. We can see now the daily candle is now an indecision candle. So what happened here all week? We had this push down, right? Which was the trend. We saw that on the hourly candle, but now your range is sideways. That hourly range, this area here that you have currently, this range is now representative of the way the daily candle's sitting. So now you sit and now you realize, okay, well, what do I do? How do I get out of that? There's no trade now, right? Because when we look and we go back into the hour, the trades were all in this area here. The trade was all in this area here. Why was it in that area there? Because what do you see? What do we see as identifiers? We have this downward trend, but more importantly, as you go into this particular area, look at the way the candles move. Right? And then we have this sideways movement again, and then look, the candles move. So now if you're able to look at this very closely, you have 1, 2, 3. This could be 4, and this is 5. So now you have 5 areas, 5 distinct areas that I've mapped out. Maybe there's 7, maybe there's 6. It's irrelevant to exactly what I'm trying to show you here. But there was 5 areas here. But out of those areas, we had 1, 2, 3, 4 opportunities for trading. And how do we map that out for that to be successful? We look at where you are in the time frames, right? And then we have to gauge our overall higher time frame. So now when we look at this and we go through it, we can see that this was the 7th of May, right? So this was back, what is that, Wednesday, I think it was, or 7th of May, Tuesday. So now when we go back to the 7th of May, we look at our daily candle on Tuesday, right? So Friday, Thursday, Wednesday, Tuesday. Now what we can see here is you can now identify where we had a trending market, where we had a trending market, versus where we have a ranging market. So now if I know that these are trending markets and these are ranging markets, what do I think about these candles? What can I anticipate with this specific area? This area here may be a ranging market. And then how do I identify that? I look to the left and I look and see what happened at this level previously. So if we turn around and we zoom this out a bit and we look to the left, you can see at this point when we go into the daily time frame, and if we want to map this out, there's been a lot of times where we've had consolidations, right? So if we know that there's a lot of times at this particular level that there's consolidations, we know that as we get to lower levels, there's potentially going to be more consolidation, right? And that's what you have to understand, and that's what you have to realize, that now that I see where we're at on my daily levels, chances are this is not going to be good to trade until we come back over here, because now, once again, we talked about this a bit on Friday, is when I start to look, the majority of my movement is over here, right? If I look over here, the majority is here. You can see up here, the majority is here. Even over here, we have a lot of movement. So as we start to look and we see where all the big candles are, so if we start to look at the big candles, you got big candles, big candles, big candles, you can start to see where it makes the most sense to be trading, right? It makes the most sense to be trading in this area. You know, even over here, you see big candles, where when we get over to here, you can see candles start getting a little smaller, a little choppier. You get, all these weird candles, same thing that you're getting over here. So as a trader, you look at yourself and you say, hey, maybe it's not the best opportunity for me to be trading at this time. Maybe this isn't the best opportunity. Maybe I need to wait for these kind of opportunities, these kind of bullish candles now. If we indeed believe we're going back the opposite way. Or if we're going down still, I'm waiting for candles that look like this, that are strong, strong candles. That can be brought into, any ideas on any time frames. If we look right here as an example, what can you see right here? Right? What do we see right here? Look at all the candles. This is your hourly time frame. Look at how they're forming. Look at the mess, right? Then you turn around and you compare it to this. What do we see as the difference? What do we notice with the way that candles are moving? They're a lot stronger. But more importantly, now what do we notice about the times? Right? What do we start to notice about the times? The movements are at specific times. And we had consolidation, then we had a breakout. So when you see stuff like this happening, when you see small candles or candles with no bodies, that's not a good indicator of a time, or that's not a good time to trade. That would be a very good indicator of time to trade. Now, when you look at candles like this that are very strong, now you start to see, hey, these are probably going to be better off for me to trade. And more importantly, when you start to look at, what I've done here. I have a resistance level here. I have a support level here. You can start to see that we're in that range, and then we break. That is where you get the majority of your move. So when you're looking at different time frames, we can go through any time frame right now. We can go through the 15-minute time frame. I can do the exact same thing for you, right? We can see here on the 15-minute time frame, here's your movements, right? This isn't movement. You can start to see now, this isn't movement. This is movement, right? That is what you want to do, is you want to be able to start identifying these things. And the easiest way, once again, to identify this is basic stuff, is very, very basic, is draw out your resistance, draw out your supports. Maybe now you'll draw out another support over here as we start to move down. And once we break that range, we jump to the higher time frames, and we're able to say, hey, if we're continuing to break down, if we break this range, because now we've come up here and we can see that we're not coming back to this previous resistance, we're probably going to go down. Now, where do we go down? So once again, this is our trade. Where are we looking to go down? That is where you jump to the higher time frames, and you start looking and saying to yourself, okay, where do I see our support going to? Where do I think we're going to on higher time frames? You can see where we break things, and you can see over here as an example, here's a resistance, here's a support, and you can see that we started to break, but then when we look at our next support, look how far down it is. So that's the reason why at this point here, it's going to be more difficult to trade compared to something that already has momentum at this point. Also keep in mind over here, we're coming into Friday, so it's the last day of the week. Also something to keep in mind. So when you look through things of that nature, that is what you want to try and do, is put everything together, piece it together like a puzzle. On a Friday, you know that the market's not going to move as well that it would in the beginning or the middle of the week as the market has more information in it. All we have to do is just take a quick look. You can clearly see where the market moves, right? Here is Wednesday, Tuesday, and Thursday, right? So we look at that. Here's your Monday candle. Go back to Friday, Thursday. You can start to see where you have the majority of your moves. You can start to look at these ideas, and you can start to say to yourself, where are the majority of these moves happening? Where do I get the majority of these moves? That's what I want to see. I want to see, where am I getting the majority of these moves? That is what you're doing the back test. I'm looking to say, okay, where did those moves come from? And how can I now capture those moves, keeping in mind where my support is and where my resistance is. Okay? So I think That's pretty much it, what I wanted to go through. I know Rakeel went through all that other stuff, so that was good. So that sort of, we had a good combination here without even knowing it, but that's how we work. We try and make sure everybody's happy. Does anybody have questions regarding any of this? No. Okay, perfect. So Rakeel will have this, and we will talk through some of this stuff. In terms of entries, I think Rakeel went through all that in the first half of the webinar. That's why I didn't touch upon it right now. In terms of entries, I mean, once again, your entries come down to what your overall plan is. And that's the one thing that I spoke about is if you don't have a plan, you can't have entries. You don't know what you're looking for if you don't have a plan. And your plan has to be, once again, identifying where things make sense. Like if I'm looking to take trades here, where's my entry? There's no entry there because, once again, everything's moving, right? And, when you look at that and you say to yourself, well, how do I make an entry? You can't because I don't know your plan. I don't know what you're looking. Are you looking to trade a single hour candle? Are you looking to trade this area here? How is your range going to work, right? So that is what you have to look at. Maybe you're trading on the 15-minute time frames, and you look at that and you turn around and say to yourself, okay, fine. Well, how do I trade this? What am I looking to trade? Well, I say to you, well, here is a resistance level, and here is, sort of a support level, right? If I look at this, what am I looking to do? I'm looking to take trades at the top portion here, trying to drive down over here with stops above here, like Rakeel said, and maybe my take profit comes to here because I don't want to go back down to this area, right? So it's just very, very straightforward and, and push it through. Can you do like high time frame analysis and low time frame execution? That's exactly what we just talked about, right? We just talked about that. I just showed you the ranging market. You can't really take trades here. So you need to identify where the market is trending. Here's where you would be looking to take trades. You can clearly see here, this I've marked off as 30-minute time frame. This I've marked off as a daily. So I know that my 30-minute time frame support, if it breaks, but once we get over here to a daily support, I have to be very, very cautious, right? So I've marked them off in different colors and I've used them so that I can identify that, hey, once I come here, there might be an issue. Like I shouldn't be trying and take trades off this, break this daily support. It might not break, and then you can see it broke just for a bit, but it's sort of consolidated in that range, and you can see essentially what ends up happening is you get stuck in all these little small candles, okay? So that is something that you need to specifically work on and figure out specific to your plan how you want to execute and then the pair that you want to execute on. To go through examples of entries, though no two entries will ever be the same, no two scenarios will ever be the same at that point. Okay, so I think with that being said, I will give this back to Rakeel.
Yeah, I think we're good. The recording will be in the drive.
Perfect.
Yeah, the recording is going to be in the drive.
Not in the what's it called? In the Forex Family website?
Yeah,
it's going to be where you find things.
Yeah.
Okay, got it.
Yeah.
Awesome.
All right. Thanks,
Thank you, guys.
Thanks, guys. Take care.
Take care, everybody.